What is going on, everybody? My name is Christian Robert. On this channel we talk stocks, personal finance, and wealth building, and today I'm going to take you through my TD Ameritrade dividend portfolio. I recently hit an all-time high in portfolio value, so this isn't a video I do very often. I've done it once before when I hit 50,000 for the very first time. So as you see in the thumbnail, I reached 53,000 for the very first time. So I wanted to take you through my portfolio and show you some of the goals I have, and at the end I will show you my portfolio yield. I know a lot of people have asked me that, so stay tuned to the end for that. But as always, make sure you subscribe to the channel if you haven't already and like the video. So let's jump right in. So if we look right at the top, you can see my largest holding is Realty Income. And I talk about this nonstop. It's my favorite stock out there. That's why I'm so heavy into it. But I have 135 shares worth roughly $9,500, and I'm up 27% or $2,000. Right now it has a dividend yield of 3.84, but I have it locked in over 4%. Next we have Disney. I have 40 and a half shares worth roughly 58, and I'm up 35%. Now, some people have noticed this, but if you look at my top holding, where it's supporting a 4% plus yield on cost, and then next we have Disney, where it's very low to a roughly 1%. I believe my yield on cost is closer to a 1.5, but this is just the ultimate stock to me. Disney is only going to, continue to rise at a quick pace, in my personal opinion, especially going into September when they release Disney Plus and all of the huge movies coming out in the foreseeable future. So I don't ever tell people to buy a stock, but I think Disney is a stock that everybody should really consider having in their portfolio. And a goal for me is to get another 10 shares of this. I forgot to mention, I would like to reach 150 shares as fast as possible, but it is just way too high to be buying right now. Next we have IBM. It's a newer position. I have 31 shares worth 4,400. I'm up just under 11%, and this has a nice dividend of 4.5 right now. Kimberly Clark. If I could only pick 3 stocks to buy, Kimberly Clark would probably be one of those. I just love the company. It's very diverse, very secure in my opinion, and it supports a nice dividend. Right now it's been on a tear. I bought this, I have an average of 108. I was even buying this in the high 90s, so I'm closer to that 3.5 to 3.7% range, I believe. But yeah, I have 30 shares. I'm up 28%. Next we have Pfizer, 76 shares, 3,200. I'm up 14%. Another, strong dividend payer. So another thing I wanted to address is that a lot of people that are new to investing, they think that they need to be buying the newest and hottest stock to make money. And even though I'm a dividend investor, if you look at my top 5 holdings, I'm up double digits on all of them. So you don't need to be out there buying these new stocks that just got released on an IPO or, some super volatile stock to make money. So I could sell these stocks and I could walk away with this profit over here. But as a dividend investor, I'm just holding out for the long term. So keep that in mind. Next, we have APLE, which is Apple Hospitality. I have 200 shares because I've recently added to my position, worth $3,100. Purchase price $16.86. So I'm really trying to get this down, but at the same time, I'm not buying anymore now that I have, it represents my 6th largest holding, but I'm down 6.5%. Now, what's cool about this is from here on out, I will be receiving $20 or more every single month. It pays 10 cents every month per share. So 200 shares, $20 to do absolutely nothing. Currently has a dividend yield of 7.6. Next, we have the only ETF, which is sphd, 73 shares, worth $3,100, up 6.6%. This one's paying me roughly $10 every month. If we scroll down a bit. Next, we have Gain, which is Gladstone Investment Corp. A lot of people have been suggesting that they should sell this stock, but I'm holding it for the long term. I'm at 2,800 value, up 3.4%. This pays me, I believe $16 a month. Next, we have General Mills. I have 51 shares worth 27. I'm up almost 23%. So, a lot of these stocks, people think they're boring, but, if you hunt for value and you find a really solid blue chip stock when it dips, you can make money. I don't suggest people buying, try to trade stocks or anything, but, a lot of people that are commenting, I noticed they're just trying to make some quick cash in the stock market. But next we have at&t, 59.7 shares, 2,000 value, down 4%. Now, I was one of those guys that was buying at&t years back when it was really high. I believe my purchase price was even around 37 for a while. Really trying to average down in this. I'd really like to get to 100 shares. And another thing I forgot to mention, with sphd, I want to get to 100 shares as well. But next is Johnson & Johnson, another staple in, dividend portfolios. I have 12 shares. I'm up 0.7%, very flat. It's had a big dip lately, so I really would like to add to this one. I really want to get Johnson & Johnson in my top 5, so I got some work to do to get this sucker all the way up. Next, we have MO, which is Altria Group, cigarette company. I have 32.2 shares worth $15.96, down 22%. Now, once again, I was buying this stock back well over a year ago. Average cost $63. I need to be averaging down big time. These are tremendous value plays right now, in my personal opinion. Do your own research before buying, but this one and the next cigarette stock I will show you in a bit, I think these are at incredible prices for the long haul. They're very cyclical, so look out for that. But I'm definitely going to be buying in soon. Next, we have PNC, which is a bank that I personally use and love. I have 10 shares, up 9%. 3M, which everybody on YouTube is talking about, I have 8 shares. And once again, I was buying this before the big drop, so I'm still down 9.5%. This is another one I really want to add to. I'd like to get, 20, another 12 shares to get up to 20 or so. So that would put me at roughly close to $3,000. If you've noticed in the value on a lot of these stocks, they're pretty close to $3,000 to $2,000 range. So it's a pretty balanced portfolio if you don't count the first few. I'd really like to get all of my shares around the same price or around the same value. And then I would like to start really focusing on those core stocks, my top 5 stocks, where I just make them really large positions. Speaking of Pepsi, 7 shares. This is a stock that I really need to get moved up the list as well. I'm up 18%, but this is one of those stocks I don't even care about price. I just need to be buying it regardless. So I have a few short-term goals as far as what I'm trying to do right now. There's a few stocks that I've been buying that I think are at great prices, but once I get those on track, there's probably going to be a phase where I only buy Pepsi, 3M, and Johnson & Johnson for a long time so I can really build those positions up. But next we have agnc, controversial stock, very risky. 46 shares, I'm down 5%. This is just truly a dividend play right here. I know it's risky. I can stomach some risk. It has an 11% yield, so I'm bringing in roughly 7 a month right now after the dividend cut, but I don't mind it. I like it. Next we have AbbVie. I have 10 shares worth $700, down 8.4%. This is actually a stock that I just added to because of the big drop. I want to get this average down close to 70 as possible. I think it's at a really good buying opportunity. I bought a few shares when it touched 66, so if we get back into the high to mid 60s, I will definitely add more to it. Next, we have New Residential Corp, which is another REIT, but it's a quarterly paying dividend, or a quarterly dividend real estate stock, which is somewhat more rare. But I have 40 shares, average cost $16. I'm down 3.5%. I'm really excited for that first dividend payment to come in. This pays out 50 cents per share per quarter. Right now, it's just under 13% dividend yield. And it seems the dividend seems very solid right now too, which is awesome. Then we have Ford, 53 shares. I'm up 4.5%. Coca-Cola, 10 shares, up 9%. The newest one, I tried making a video on this several times, but just had a lot of problems with my computer. But Geo, this is another real estate stock. It's a bit controversial too. They specialize in prisons and after prison facilitating, so we're not going to talk too much about it. We're not going to get political on this channel, but I'm down 14%. I bought this way too high. I'll probably snag a few shares just to average down, but I don't want this to become a big position. It's just another dividend play, rocking a 10% yield right now. But then we have Home Depot, 2 shares, up 21%. Caterpillar, 3 shares, up just almost 20% as well. So of course the two stocks that I only have a couple shares in are up a lot as well. So once they dip back down, I'll add to those. Kraft Heinz, 13 shares, no big deal, just down 40%. This is one that really stings. Did not see this coming, obviously. Purchase price roughly $51. I'm not too worried about it. I think in the next 3 to 5 years, they'll really strain the company out, get things back on track. Either way, I'm in it for the dividends. So as long as they keep paying the dividends, it's good in my book. Next is the other cigarette company I was referring to, British American Tobacco. Another great value. I think I got this at an incredible price, $33, but I still think it's at a really attractive price at $36. 10 shares, up 8.5%. Huntington Bank, I have 25 shares, very flat. This is a smaller regional bank. Then finally, we have Public Storage, 1 share, up 18%. And my spec play, which is Switch, I have 10 shares, up 13.2%. Now, I know this was probably a longer video, so if you're still sticking with me, I wanted to just show you this really quickly. And that is, once I find it, my dividend yield for the entire portfolio is 4.5%. Now, I'm very, very happy with this number. I would like to keep it above 4%, even though I'm going to start getting a bit more conservative or defensive, if you want to call it that, once I start focusing on, Pepsi, Johnson & Johnson, 3M. So to me, those are more conservative plays. So once I start really adding to those, you're going to see that dividend yield decline a bit. But if I can try to balance it out by still purchasing some real estate stocks here and there, I should be able to keep it around that for a while. So I'd be really happy with that. And yeah, I'm still on track. If I don't have it pulled up, but if you see my spreadsheet I have for this, I am expected to make $2,300 this year in dividends. Very excited for that. We're just over halfway into the year now, and I've already brought in over 1,000. So if you stuck around to the end, I thank you for watching. That's all for this one. But if you haven't already, make sure you subscribe to the video, like the video, comment down below what you guys think of the portfolio, and I will see you in the next one.